Welcome back to the Deep Dive. You've given us a pretty dense stack of technical reports, and we're here to pull the signal from the noise. Today, we are putting one of the market's absolute biggest movers under the microscope, NVIDIA Corporation. That's ticker NVDA. We've got this detailed technical analysis right in front of us. It's dated January 10th, 2026, and the stock is priced at $135.68. Now, everyone has an opinion on NVIDIA, right? Is it leading the market or just running on fumes? But we're going to look past the hype, straight into the mathematical heart of it all.
That's right. And our mission here is really to be your interpreters. We're going to translate all this, highly specialized language, the ADX, OBV, all the moving averages, into something clear, something you can immediately understand. We're focusing on the mechanical signals and, more importantly, why they matter. What do they tell us about buying behavior?
And the baseline here is, well, it's anything but ambiguous. The report gives NVIDIA a technical score of 66.68. That score immediately classifies the stock as explicitly bullish. And that's for both the short-term and the long-term outlook. It's a really strong, unified signal.
Okay, let's unpack this. A high score is great, but what's the evidence supporting such an aggressive bullish rating? Is this strength just a flash in the pan, or is the architecture here solid?
Well, we have to start where all good analysis begins. The trend. The prevailing movement is rated bullish, and it has an extremely high trend score of 79.17.
Okay.
But that score isn't just a mood. It's backed by measurable conviction. And we see that with the average directional index, the ADX. The ADX is currently at 30.58. Now, you can think of the ADX as measuring the strength of the wind, A reading over 25 usually signals a strong, validated trend.
So 30.58 means?
It means a strong trend is in place. This is so important because it tells us the upward move has genuine force. This isn't just weak, indecisive, choppy sideways movement. This is directional conviction. That's a key distinction. For momentum stock like NVIDIA, which, it can move so dramatically, is an ADX of 30 a sign that we're already too late? Are we just chasing a move that's mostly done?
That's a great question, and it really speaks to the quality of the move. If the ADX was, say, spiking from 10 to 45 in a week, then yeah, that might signal an overextended rally. But 30.58 suggests a strong, mature trend. This reading often goes hand in hand with institutional buying, with professional position building, the kind of money that builds durable movements.
So it confirms the trend is reliable.
Exactly. Makes it much less likely to just suddenly collapse.
And that stability is, it's absolutely visible when we put the current price, $135.68, into its annual context. It tells a story of consistent strength. The 52-week high is at $153.35, and the low was $74.40. It's amazing to think it's nearly doubled.
It really is.
And our current price is at 78.89% of that range. That near four-fifths positioning is serious proof that this trend, the ADX identified, hasn't just materialized out of thin air.
No, it has had a long, sustained runway. And that high altitude is only safe if the underlying structure is sound. And that brings us to the moving averages.
The foundational health of the stock.
Right. Analysts use these to understand the average price across different time frames, stripping away the daily noise to see the real flow of power.
So how does that upward flow look? We're looking for alignment, right? Which is hard for any stock to maintain.
And what we see here is a textbook. It's an unambiguous bullish alignment. The current price of $135.68 is trading above all the major simple moving averages.
All of them.
All at the same time. It's the gold standard. Specifically, it's comfortably above the short-term SMA 20, which is at $130.90. It's above the medium-term SMA 50 at $132.46. And most importantly, it's far above the long-term institutional safety net, the SMA 200.
And where's that sitting?
All the way down at $115.58.
Wow. That SMA 200 at 115 is such a powerful anchor. Trading this far above it just shows how high market expectations are for NVIDIA. It gives a massive margin of error. Okay, so the stability and directional strength are undeniable. But let's check the engine room. How much actual buying is sustaining this price? The report says volume is neutral.
Yeah, the relative volume is 0.90, so just a little below the 10-day average.
So day-to-day trading is just average.
And that's where the analysis gets really nuanced and I think really interesting. Average volume can make you wonder if the big money is just sitting on the sidelines. But here's where we look past the surface number and check the pressure inside the hose. We look at the quality of the buying.
Which brings us to on-balance volume, the OBV. People call it the secret accumulation indicator.
Precisely. OBV tracks if volume is flowing in on up days or out on down days. And the report shows the OBV is rising.
Even with neutral volume overall.
Yes. And that signals what we call accumulation. It means that whenever the price moves up, the volume behind that move is dominant. Buyers are eager to step in, so even if the daily trade count is average, the buying power is winning the battle. It's a powerful confirmation that this trend is being fueled by deliberate, often smarter, money.
Okay, so we have trend conviction from the ADX, a rock-solid foundation with the SMAs, and confirmed high-quality buying pressure from the OBV. It's an almost perfect picture. But even the healthiest engines can overheat. Let's apply the brakes for a second. Is the stock running hot? Let's look at momentum.
And this is where we find the most interesting nuance in the whole report. We get a consensus picture, but with one very specific yellow caution flag. First, the two main indicators. The relative strength index, the RSI 14, is at 60.36.
60. So that's bullish territory.
Clearly bullish, but importantly, it's not yet deep into that standard overbought zone, which is usually pegged at 70 or above. The stock has room to run.
And the stochastic oscillator.
It echoes the RSI. The stochastic is at 79.26. That's high, it's bullish, but it just sneaks in under that common overbought threshold of 80. So the medium-term picture is still strong.
Okay, but you mentioned a caution signal, the one that suggests maybe a brief pause. Where does that come from?
That comes from the Williams per SAR indicator. It's one of the fastest moving oscillators, very sensitive to immediate price action, and it's flashing a reading of minus 5.30.
Minus 5. And for Williams per SAR, that's different, isn't it?
Yes, for Williams, anything between 0 and minus 20 is typically considered overbought. Minus 5.30 means the stock is essentially hugging its 14-day high almost every single day. It's running a sprint.
So this is our critical tension point. Long-term conviction is there, accumulation is there, but this hyper short-term measurement suggests it's moving too fast, too quickly. Why are they disagreeing?
They're measuring slightly different things. The RSI measures the magnitude of the gains, while the Williams per SAR measures the position within the recent range.
Oh.
So this stock hasn't moved violently high in price, which keeps the RSI under 70, but it has consistently closed near the absolute peak of its recent activity. And that's what drives the Williams per SAR into that overbought zone.
So it's a velocity warning, not a reversal warning.
Exactly.
So how do we confirm which signal is the truth here? If we have this internal conflict, what's the tiebreaker?
We look for a powerful counter-confirmation from a trend-following indicator. And that brings us to the MACD, the Moving Average Convergence Divergence. It's one of the most reliable tools out there. And the MACD provides a clear, definitive buy signal in this report. The MACD line at 1.45 is above the signal line at 1.29, and the histogram is positive.
That's the ultimate reassurance then.
It really is.
This strong, confirmed buy signal from the MACD heavily counterbalances that short-term warning from the Williams per SAR. It tells us that, yeah, a 1 or 2 day dip is possible, but the underlying momentum is firmly in place.
Absolutely. The engine is running smoothly. It just might need to downshift from a sprint to a jog for a moment.
Speaking of movement, let's talk about the range. The stock's volatility is characterized as average, pretty middle of the road.
And we can see that stability with the Bollinger Bands. You can think of them as the stock's personal gravity field, setting the normal boundaries. NVDA is currently trading in the upper half of those bands. It's sitting right between the middle band, which is conveniently our SMA 20 at $130.90, and the upper band at $139.99.
And trading in that upper channel is consistent with a bullish trend.
Perfectly consistent. It shows the upward energy is dominant and the pull toward the lower band is weak.
Which brings us to the immediate practical roadmap.
Yeah.
The pivot points. These are the mathematical beacons that define the battlegrounds for the immediate future.
They are absolutely critical, especially when a stock is trading near an inflection point like NVDA is right now. Knowing these levels really defines your strategy. The central pivot point P is $135.77. And notice how incredibly close our current price of $135.68 is to that. The price is just magnetically drawn there.
We're right on the cusp of a decision.
We really are.
So if buyers want to continue this strong trend, what's the first barrier they have to break?
That would be the immediate resistance, R1, sitting at $137.40. Pushing past that level confirms the bullish narrative for the short term.
And on the flip side, if that Williams per SAR warning proves true and the stock takes a breather, where is the first line of defense that buyers absolutely must hold?
That's the immediate support, S1, at $134.54. If that level fails, you're likely looking at a quicker test of that SMA 20 around $130.90. Holding S1 is crucial.
Okay, so to quickly summarize this deep dive, the report confirms the story for NVIDIA is overwhelmingly bullish. This isn't flimsy, it's structurally sound, backed by that ADX at 30.58 and the accumulation signals from the rising OBV.
Right, and the foundation is solid, with the price above every major moving average.
But there's a key nuance.
The most crucial nuance for you to take away is that tension we found. You have confirmed long-term strength from the SM alignment and the MACD buy signal, but that's contrasted with the immediate, very short-term warning from the Williams per SAR overbought signal. The implication is that the path forward involves managing brief pressure, not facing an outright reversal.
And that leads to our final thought for you to mull over. Given the price is sitting almost exactly on its central pivot point of $135.77, the action over the next few sessions is going to be defining. So the market has a choice. Will the established strong trend just muscle through that short-term pressure and challenge resistance at $137.40? Or will buyers pause here, let the price dip to test support at $134.54 before gathering steam to continue its upward trajectory? That short-term battle is now the key story to watch unfold.